Welcome to the Cutting the Accordion Knot podcast. Today we are joined by Steve Hayes of FairTax. He's
Mhm.
here to describe a bunch of the facets of this. He's described himself as a recovering tax attorney. Stephen, welcome to the show.
Well, thank you very much, Jake. It's my pleasure. I'm looking forward to it. I, yes, I consider myself a recovering tax attorney because, like a recovering alcoholic, you really can't get away from the temptation. And in my case, I'm still a practicing attorney. Nothing that we do eliminates the need to look at the tax code and to factor that in, because every business decision can be adversely impacted if you do not adequately consider the tax consequences, because it can have a 15 to 30 to 40% swing in return based on how it's treated from a tax point of view. So it's a system that permeates everything. I consider myself recovering because I don't actively look for nor do it, but I do find myself having to be aware of taxes, consulting people that still are tax attorneys with certain questions. And I found out in the 80s that it was so embarrassingly sad the way it was applied. And the reason I say that is you had a bunch of people, and back in the 80s, you still had a number of very qualified agents, at least the ones I was dealing with in the IRS. You didn't have people who graduated with an art degree and took 20 hours of training like you do now that are going out to audit people. You had actually people who were, I had audits with CPAs working for the IRS. I had audits with very experienced accountants working for the IRS. So it was a different mindset. But what I found was, because the tax code was so bizarre and so general, that you would have an audit of a particular investment in 5 different regions and get 5 different results.
Wow.
It was just not applied uniformly. And the reason was because there was so much of generality in what is a business lunch, as an example. You talk for 5 minutes about business and 3 hours about kids, or do you have to spend, it's just not defined. What is a business trip? All of these things are out there, but they're not defined. And Money Magazine was a magazine that was prominent back in the 70s and 80s. And it used to have a quiz that they did up into the 90s, where they would take 50 tax preparers from around the country, and they would give those tax preparers a hypothetical tax situation. Husband and wife, 2 kids, and all of these different things. They would get 50 different results every time. And the craziest thing is, you would go from a person owing $40,000 to getting a refund.
Oh my goodness.
So it's like a huge swing.
Right.
And these were all very experienced tax preparers. They were not, the kind of guys that wink, wink, Jake, I'll make sure you don't pay any taxes. They because their names are going to be published. I mean, my gosh. All right.
Yep.
Who wants to be embarrassed? And so I started looking around, and then we came up, a group of us, with the idea that even though we liked the idea of a flat income tax, that it really would not do anything, because you still had to describe income.
Yep.
Before you could do a tax. And Reagan proved, when he did his reform, that it will only stay flat until the next Congress meets.
Totally.
They'll start adding things back to complicate it and do all
additional
these
deductions and exemptions and credits. Yep.
Thousands of changes since the 1984. Thousands of changes. And so what we looked at was, how do you really do that, and what's the real purpose of a tax code? Strip it back. What's the real purpose? The real purpose is to raise money for the government.
Mm-hmm. In a
Now,
way that doesn't distort the decisions of people who are seeking to
absolutely.
create value, which is kind of where you started there, saying every business has to keep one eye on the tax code, when
Yes,
we'd prefer they keep both eyes on value creation. I mean, I'm a
absolutely.
business owner, I build homes, and I'm constantly thinking of what on earth is going to happen to my tax bill. And at one point, I don't do my own taxes anymore, thank goodness, but I have in the past. And at one point, I said, no, I think they're wrong. I think the IRS is wrong. So I wrote a letter to them. I said, this is how I came up with it. This is how I calculated everything. I really think I'm right. They sent me back to a letter. Yeah, you're right. Nope, we're sorry. Yeah, no, we made a mistake. It's like, okay, you're the IRS. You're
Right.
supposed to know this. So it's not just tax attorneys disagree. It's people filing their taxes also may disagree with what it is. And even the IRS, one agent to the next, might not necessarily know when things get complicated how to assemble your final tax bill.
It's totally the case. And what we're starting to see more and more, as you have less qualified agents doing audits, is you're starting to see what I call the extortion game. And it's not new, it's been going on ever since I've been working in taxes. But it's where they come into you and they say, all right, Jake, we've done an audit and we don't believe these deductions are allowable. And it's going to cost you an additional $5,000 in taxes.
Mm-hmm.
And you go, wait a minute. Of course they're allowable. They're documented, they're this, they're this, they're this. And you go to your tax associate, whoever's handling the audit for your CPA attorney, and you ask for advice. What do you do? Well, generally the advice is, well, let me make a try to
Mm-hmm.
explain it again. And then, well, what do we do if they don't do it? You pay it.
Yeah.
And the reason you pay it is because it would cost you much more to fight it in terms of their fees and their interest and time
Right.
than it would be to pay it. Because you may win ultimately, but it may cost you not 5, but 10,000.
Mm-hmm.
Pay 5. It may cost you more. So generally speaking, a lot of the agents had gotten to a point where they'd look at a tax account and they would say, well, this guy can afford to pay $3,000 or $4,000. And I'll have a report that I collected money at an audit.
Mm-hmm. Oh,
And
wow.
so they just do that. They just assess it. And you have to disprove it. You have to prove a negative.
That's crazy.
And
That's
so
crazy.
you're seeing more of that because, again, back when I was more active in it, you could do things like you did. You could talk to the agent and reason
Mm-hmm.
with them and explain.
Mm-hmm.
And they would go, I think you got a good point. All right, we're gonna do this. What if we did this? Compromise.
Wow.
You come to a conclusion, and it's probably fair,
Mm-hmm.
and you settle. And you do it without spending tens of thousands of dollars doing it. So came up with the idea, if we want a system that collects the tax the best way, the least distortion to the economy and to people, why not look at something that's been around for hundreds of years, which is an excise tax,
Mm-hmm.
sales tax.
Yeah.
We've had customs, we've had tariffs, we've had whiskey tax. There was a rebellion, first rebellion in the United States under
Mm-hmm.
Washington was against the whiskey tax. So we've had these taxes. They're provided for, I think it's Article 2, Section 8 of the Constitution, excise taxes. You don't need an amendment. The states already have a very, very efficient system, 45 of the 50 plus the District of Columbia, of collecting sales tax. So why don't we just have, in addition to that, a federal sales tax?
Mm-hmm.
Get rid of the income tax, corporate and personal, get rid of the estate tax, get rid of the gift tax, get rid of Social Security funding through the payroll tax,
Right.
do it all through the sales tax. And then it becomes very simple. Everybody sees how much they're paying for the cost of government every time they make a purchase.
Perfect. What I would like to throw in a small addition, if it's not there, you can call it the Jake Amendment. That is, so have it listed on your receipt, the price and then the tax. Then have just in small print, break it down based on where that money's going.
That
So
would
you'd
be,
see 65 cents Social Security,
yeah,
28 cents Medicare, and then it'll be stamped into everybody's brains. What are the biggest costs in the federal government?
that's right. And how can we actually reduce the tax?
Mm-hmm.
By what would we have to cut? And see that
Mm-hmm.
you brought up a huge point because today, if anybody, and I don't care if it's Jake or Steve or if Einstein was still around, was asked to look at the amount of tax they pay and say where it goes,
Oh, goodness.
they would have a very difficult time.
Mm-hmm.
And the reason is not because they couldn't take the actual check they wrote to the IRS, but they would never be able to look at all the taxes that are included in products. For example, you build houses. You have to mark up the price of the house by enough to cover all of your expenses.
Mm-hmm.
That includes federal payroll taxes because you have people to help you build it, unless you build them all with a 3D printer. Okay.
Not yet.
And so you have payroll tax and you have income tax that you have to
Mm-hmm.
calculate in. Well, all of those things increase the price you can sell the house for, because if you don't cover all your costs, you're out of business. You're
Right.
not the government. You can't print money.
If
So
only, if only.
therefore, yeah, so therefore you increase it. And everybody that supplies you, from the tree farmer to the person at the mill, everybody had to make the same calculation and add in a fee to cover their taxes.
Mm-hmm.
So if you peel all that back, it's been estimated, and it's really an estimate because it's so crazy, like you get something from FedEx. Well, you got, how much did FedEx increase their cost of delivery because of tax? You can get it down to a point of where it's almost impossible to calculate.
Yep.
But there have been some pretty good estimates, somewhere between 12 and 25%, depending on the industry and how many hands it had to go through to get to the ultimate consumer, because that's how many people marked up on the way out. So if you look at that, well, you don't know how much when you bought other things that you paid in federal income tax,
Mm-hmm.
because you don't know
Right.
unless, well, I don't think anybody could know.
No way.
So,
No way.
so those are things that are hidden. But when you do the fair tax, which is simply a retail sales tax, where you pay, it's a 23% inclusive rate, and I'll explain that in a minute. You pay it on every new good, retail good, and retail service, like going to the barber. Then it's very clear, because let's say that you paid $3 in sales tax. You can look at the budget and do exactly what you said. Well,
Mm-hmm.
65% of that $3 went to Social Security
Right.
or other
Okay.
social programs. And
So,
you really can be in charge of determining how much you have. And when that congressman or congress lady comes to you and says, Jake, I'm going to cut your taxes, you can say, okay. And how are you going to do that? By what are you going to cut that's going to allow that rate to go down?
mm-hmm.
Very simple. They can't argue with it. The other thing is that all of the people, and home builders are special interests, no slam
Oh, yeah.
intended, but all the special interests have carved out or try to carve out and protect different parts of the tax code that give them a benefit.
Right.
That's no longer there.
Yeah. I mean, so far we're up to 4 reasons why this is a fair tax. It's transparent, right? So
Yes.
things which are transparent, you actually understand what you're paying, seem to be more fair than things which are hidden and baked into the cost of all goods.
Right.
Um, it's fair because it's not necessarily a good thing to tax when you're giving, tax when you're investing, or tax when you're saving, because each one of
Right.
those things is a benefit to yourself and others, right? But to tax when you're consuming, that's fine. Like if it's your money, go ahead and consume. But there is a split between public and private costs to produce a good. Presumably that worker in a factory that made you your widget could read, and that was done by public education, for better or for worse. I think for worse, but like it or not, we have a blend of public and private goods and services which go into end products. So to apply a charge on those products doesn't seem terribly unfair. And the moral statement it seems to be making is the more you consume, the more you pay. And hey, these things ought to somehow slightly coincide with the costs which you're putting on others. Whereas charging people for, say, income is saying the more you work, the more you pay. Well,
Right.
that doesn't really seem to make a moral statement. It seems like, well, working is good. It helps myself. It helps others. It does good things. I don't understand why I would have to owe you more taxes in virtue of my work, or in virtue of my wise investments, or in
Hmm.
virtue of the fact that I made or received or inherited. That doesn't seem to make a morally correct statement. So it's fair in the sense that it's a consumption tax, transparent, a lot of good stuff here. So I just kind of wanted a quick run through that to keep
No,
people up.
I appreciate that because those are a lot of the points. Now, the one thing that we ended up doing, which was a little bit controversial at the time,
Mm-hmm.
well, there are two things actually, but I'll take the first one, which was the most controversial.
All
And
right.
that was we were sitting around, and again, this was a bunch of tax attorneys who actually wrote the bill, the first bill.
Mm-hmm.
It was called the Tozan Bill back in and introduced in '92 by Billy Tozan from Louisiana.
Gotcha. Any economists in the mix? I did see that, at least according to Wikipedia, you have 80 economists, including a
Right.
Nobel laureate, who support this plan.
Absolutely.
Any
No,
involved in the drafting?
there's been incredible number of economists, but not in the drafting per se.
Okay. All right.
They were the ones that looked at the impact economically.
Mm-hmm.
They did
Mm-hmm.
studies. There's been millions of dollars of studies done by prominent economists on
I
how this would
I
change the
collected
benefit.
I collected a little bit if you want me to quote it now.
Sure.
So there's a couple econometric firms. Let's see here. So Beacon Hill, for example, said
Right.
that they were predicting a 10% increase in GDP over just 5 years, over and above what the current system would have. And
Right.
there's another econometric firm whose name I forgot, but they said a similar increase, but over closer to 10 years.
Right.
We have an estimated as high as 85% increase in the capital stock, which should come as literally no surprise to anybody. We
Right.
could have up to $11 trillion held internationally in foreign banks right now come back to the U.S. and be repatriated. Obviously, it would be a great place to headquarter a business if you don't have all these
Mhm.
corporate income taxes. You have a much simpler tax code. Regulatory burden is lower. Some people have estimated the total cost of tax compliance in the U.S. at up to 3% of the total economy. That should drop dramatically.
Right.
Oh, let's see. Domestic capital stock up by 85%. I think I said that, but that should cause structurally lower interest rates, right? So if we increase the overall capital stock, that should drop it by as much as 35% by some estimates. So,
It's been, and it's been absolutely a situation where, well, back in the '90s, I used to go on panels, and I would be with economists, and here I'm a dumb lawyer, right, with a
mhm.
multifarious economist, and every once in a while there would be one of them that tried to say, "Oh, this isn't going to really work,"
Mhm.
and their fellow economists would ridicule them, not in a
Wow.
mean way, but just laugh at them and say, "Yeah." And we pretty much haven't had that come up as an objection. It is going to grow the economy. There is just not even an issue.
Mhm.
And there are a lot of other underlying reasons, which we'll get to. But I think let me cover these 2 points. The first one was we tried to make it a bill that would somewhat mimic the way the income tax worked. And let me explain that. We wanted it to be where businesses now they deduct their cost of goods.
Mm-hmm.
We wanted it to be there's no tax on the cost of goods, so there's no deduction. Okay, there's no tax on the business, there's no deduction.
Mm-hmm.
We wanted it to be where at that point we had a relatively small standard deduction for individuals. We
Right.
wanted to have something that would mimic that in our bill because we felt like that it would be impossible to go with a pure tax on expending at that rate,
Mm-hmm.
okay, without providing a cushion for lower income people.
Gotcha.
So
Okay.
that's how the family allowance came to be. That's how what we now call the prebate came to be. And effectively, it's taking the Health and Human Services definition of what's poverty and saying that your purchases of new goods,
Mm-hmm.
underline new, retail goods, and services up to, and I'm going to round off, it's a little higher, but $40,000 for a family of four are not subject to the tax.
Mm-hmm.
So if the family of four, the mom and dad go to Walmart and they buy $40,000 of goods, they're going to pay tax at Walmart, but the amount of tax has already been put into their account at the first of every month. So let's say they
Right.
were going to pay
Mm-hmm.
$4,000 in tax this month. They would have had a check deposited on the first of the month for
Sure.
$4,000.
And that would cover the increased expense
That's right.
of the
And then
tax.
as they go out and make purchases through the month, that 4,000 would be used up. Now,
So
there's one other point that's critical. How many people do you know that have a family of four making $40,000 that drive new cars every year?
not too many.
No. How many people do you know that are making $40,000 with two kids don't buy toys and clothes and all that are used,
Mm-hmm.
when they can?
Sure.
All right. Those are not subject to the fair tax.
Gotcha. Okay.
So you can actually have people where part of that $4,000 actually increases their spendable income.
Well, let me add one more thing to that, and
Yeah.
that's in the bottom quintile, roughly a third of income is indexed to inflation because it's, let's say, a type of Medicaid benefit, or
Right.
it's something which doesn't have, it's not paid just in dollars and then spent in the private market, but it's the provision of a good or service.
Right.
So that would exempt a third in the bottom quintile, so that
Right.
alone would make the tax progressivity um, there, even if we just didn't have a prebate at all. And let me throw in another point, which a lot of people might miss. And this is actually more of a concern fairness wise for me. And don't worry. So I am so enthusiastic about consumption taxes that I can't feel my legs. All right. And I will join anybody, economist or not, in laughing at an actual economist who thinks consumption taxes are not the most pro growth tax. Like, come on my show. I will destroy it. This is so ironed out. Okay. So consumption taxes to me are an absolute no brainer. I do have nitpicking issues with the fair tax, which exactly is why I want to talk to you.
Mhm.
One of them for all consumption taxes, though, a downside is when you first implement it, it acts as a wealth tax because it devalues the spending power of any accrued wealth. And then so let's say I have $1 million in my bank account. Then we have a fair tax, or we have a VAT tax, or we have something else. Well, I go, oh, I have $1 million. I can buy all this. No, I can't anymore, right? Because the price rose. No, when you first implement it, it acts as a wealth tax, but it's not actually paid until they begin to spend that wealth. So for the first, I don't know, 10, 20, 40 years, the progressivity of the tax code is actually much steeper than it would be once all of that which would be consumed is consumed, and then it simply it reflects the spending power that comes from say, capital gains, dividends, interest, and income.
Right.
So,
And that's a good point, but there are two factors I would throw in.
okay, cool.
All right. One is that you're looking at it as a static, saying the prices are going to be the same, meaning they're going to be at $1 plus
Mm-hmm.
FairTax.
Mm-hmm.
But when you take all of those costs that you and your suppliers are paying
Mm-hmm.
out of the cost of a home, what's likely to happen to the cost of a home?
Right. That should fall. And I'm really glad you brought this up because I wanted to ask you a question about precisely this. So, we all try to have more or less um, clear crystal balls for the economic
Right.
future. And when I peer into mine and I say, we're going to eliminate, say, the income tax and other taxes, we're going to add on any type of large scale consumption tax, I think, well, we're going to need more money in the system because we have to clear the purchases which would reflect the retail price plus a tax. And normally we would just have a fall down to the nominal price level from before, but that only would happen if we had a corresponding fall in take home wages. But if people now receive their whole paycheck, so you go from
Right.
getting 50 to 75, and we've applied a tax on your bag of potato chips at $3, it goes to, $4 or whatever, then the demand for currency has just jumped up a lot. And without an increase in the monetary base, we're going to see interest rates spike. And then that's going to depress economic activity. It's going to push people into unemployment. And then unemployment will mean that people come back into the labor force with lower wages. And which is, I mean, that's good from that point on because now all of the input costs, including labor, have fallen. And then given the same amount of money supply, the price should fall. And then we should end this period with a similar amount of take-home pay and similar prices if the overall tax load is similar. My question is, what do you think about just instructing or, prompting, say, the Federal Reserve to do a one-time increase in the quantity of money so that instead of letting unemployment be the thing that flexes and changes wages, let's let the price of goods and services take up that difference. And then we arrive at, okay, I went from making 50 to I make 75. And then I'm paying $4 for my potato chips. So we just allow the quantity of money to increase to reflect that.
Well,
And then over time, at that point, we don't have to deal with any type of increase in unemployment.
see, again, your point's well taken, but I think, not taking into account one thing. When people are buying those potato chips today,
Mm-hmm.
they're buying it with after-tax dollars.
Right.
So when you look at it and you say, well, the price is going to be $4.
Mm-hmm.
Well, how much do you have to earn to net $1? The average person, it's at least 15%. Most of them are 20% when you look at Social Security and some income tax brought in,
Mm-hmm.
because you have to gross it up.
Right. Right.
And then you net it down.
Mm-hmm.
So the actual increase in price, if the price stayed the same, in most cases, and some of the economists have looked at this, is fairly minimal. The after-tax cost and the sales tax cost, because of the fact that you're now eliminating and you're putting in your paycheck that amount to keep.
Right. So the
using
standard of living
dollars.
would stay the same, right? Because we're
Exactly.
basically you're saying the standard of living of somebody would stay the same
Well,
because right now we're taxed on the front end on our income and then later
right,
on the back end on our stuff.
right.
I totally agree with that.
Yeah, but let me add one other thing. The income would actually go up a bit to you because you're not having any taxes withheld.
Right.
However, you're also assuming, if you're looking at it, and as some economists have, that there will be no decrease in price. Well, I think that's frankly ludicrous because 90 some odd percent of the retail sales in this country come from the top 8% of retailers, the Amazon,
Mm-hmm.
Targets, and those people operate on razor thin margins. If they have a chance to cut prices, they're going to cut them so they can
Agreed.
compete with others. So you're going to see a lot of the retail prices go down. Now, you may make homes that are of such quality that nobody cares what they pay.
If only, if only.
Well, I'm just saying that is a
Sure.
possibility. There are heart surgeons that have such a reputation. My guess is their price is not going to fall a dime.
Mm-hmm.
It's going to stay the same. But in every other aspect of life, almost, you're going to have competition doing it. You're going to see it in cars. You're going to see it in other types of computers, supplies, because people want to sell goods. They're highly competitive. They're going to have to respond to pressure, and that's the way it should be.
Right.
Frankly, it shouldn't be government saying, "Oh, well, you shouldn't sell that house for more than." It should be, what does the market allow me to do?
So if we stop, say, so we no longer have, say, a corporate income tax that lowers the burden on a company. That's going to be reflected in lower prices, like bang. My issue is, well, wages are pretty sticky. So I agree with like pretty much every tax except for wages, because if it's like, I mean, the part that the employer pays, well, now they don't have to pay it. So that's going to be reflected in lower prices. But my only issue is the part that the individual is now receiving in additional funds because it's not being taxed away.
Right.
I'm like, okay, that's a demand for currency just in the economy. And we also have a new demand for, that part of the prices. The prices will fall based on the corporate income tax, based on a lot of property tax, based on a lot of taxes. But that's one where nobody's going to say, hey, great news, we're going to let all the prices fall, so we want your income to fall. You're going to say, well, no, man, like I want my whole paycheck. At which point, that's the point. That's really the rub of.
But aren't they getting their whole paycheck?
Right. They are getting their whole paycheck at this point. So we have a lot of demands for liquidity in order to pay all that and now to cover the new cost.
And it's a good point that I really haven't looked at, because most of the economic data that I've been going at, and I'm also looking at it from a tax lawyer point of view, is the key thing to me is the benefit after tax, before tax.
Right. And I want to get into some things which are totally up your alley, which is what gets included. I'm sorry I spent so much time with that.
No.
But we kind of have we have a motto on this podcast of sorts, and I really try to stick to it, and that is the compassion of the ignorant is cruelty. And I know that whenever I don't know something or anybody doesn't know something and we make a big change, I'm always worried, like, if we miss something, it can hurt people. I'm trying to stare into my crystal ball and being like, is this going to change anything? Do we need to adjust monetarily? I think this is like consumption taxes. 1,000 thumbs up here, but the transition periods are always very tricky.
They are.
And, it's hard to say what happens next. There's just so many moving parts in an economy that it's just hard to say. It's deeply interrelated. It's something that no one person could possibly understand or predict. I mean, econometrics is, it's a kind of a thing, but there's a lot of flex in those numbers, a lot of assumptions which go in there. And the only way you know what happens with the change is if you do it. We got to do our due diligence figuring out what could happen next. But it's just, it's plain.
The battle plan changes when the first shot is fired.
Exactly. Yeah. So I'm thinking.
And I think that's very accurate. And I think, but see, you've got other factors also, and you're right. We could probably have a 4-hour podcast.
Oh, yeah. Hey, I'm up for it.
All of the factors that would be involved.
Yeah.
Because one of the biggest parts that, frankly, Trump is saying, I'm going to raise tariffs.
Oh, no.
Right? And a lot of us don't really believe in that, but his purpose is so that, presumably, that he'll improve trade. He'll be able to negotiate deals to make trade more fair.
So he thinks.
But also that he could use it to reduce income taxes.
Okay.
All right. Now, here's the problem you have in the U.S. right now. Congress knows about it. Brady and tried to fix it, got shot down. But you've got a situation where we are the only trading partner among 164 others that does not have a value added tax.
Right.
And
Right.
the reason why that's important is that a value added tax only taxes, a value added tax means that every step of production,
Mm-hmm.
you tax the growth in value.
Mm-hmm.
If you cut a tree down, send it to the mill, and it's worth 20% more, you tax to 20%.
Right. It's like
All
a
of that gets
consumption tax
included,
that builds up along the way.
builds up along the way. Each successive person gets credit for the tax paid earlier and then
Mm-hmm.
pays the tax on the appreciation. That's all true if it's sold domestically.
Right.
But if it's not sold domestically, if it's exported, like to us, their value added tax is rebated
Mm-hmm.
to the exporter. So now they've got a product, and let's say it's a 20% value added tax. Now they've got a product that would sell for $1, in my example, in their country, but that they can send to the United States for 80 cents.
Sure.
That gives them a huge competitive advantage because when it gets over here, we don't have a value added tax.
Mm-hmm.
At a federal level, we don't charge any tax. In fact, the only tax on that import will be as it's calculated into the profits of the company selling it.
Right.
You know, J.C. Penney buys an 80-cent shirt and they make 6 cents. Well, they pay tax on the 6 cents. So it's 2 to 3% tax, perhaps, instead of 20%,
Right.
like we have over there. So it's highly, highly adverse to U.S. interest in terms of competition because they can undercut our prices. Now, we take grain from Nebraska and we send it to Europe. They get the grain, and what do? They put on a value added tax.
Mm-hmm.
Now, we don't give back the 15, 20, 25%, whatever the embedded cost of government is.
Right. So basically, we're charging our producers, and they're charging their consumers.
Right.
So when we go to import and export, so your plan has a border adjustment, so it would basically match
It's
what
only
they're
on
doing.
retail purchases. So anything exported doesn't have a tax on it at all.
Mm-hmm.
So it goes over effectively the same as being the rebate on the value added tax. So what you're going to see is a huge tremor of shifting
Mm-hmm.
because you don't have a tariff, so you don't have a tariff war. You have the same tax system being applied in the US. What's the country going to say? Well, that's unfair to do the same thing we're doing.
Right. They're good.
No.
Exactly.
Yeah. So what's going to happen is you're going to have, as you pointed out earlier, a huge interest in people looking at the United States, which now has become the biggest tax haven in the world.
Mm-hmm.
You've got the biggest economy, the safest economy, and now the biggest tax haven. And all that money, it's on the shelf. You talked about money that was in, U.S. corporations and all, but what about all that money that's been stolen out of Africa and out of Russia and out of China that's sitting what they call on the shelf between 5 and 15 trillion? I've seen estimates.
Mm-hmm.
That's not in any country. It's being invested, but without the benefit of any tax treaty. Okay. So what happens is they would then want to invest in Germany and pay a 30% tax, or would they want to invest in the US and pay zero?
Mm-hmm.
You're going to have a huge attraction to the US. You're going to have companies that are now set up in their own jurisdiction, like we were talking about all the US companies moving their base offshore.
Mm-hmm.
You're going to have all the foreign companies that are in situations like even in Hong Kong with a 10% tax. Well, is it 10%, particularly with the Chinese? Who knows what they're going to do? Is that better than zero? Probably not. You're going to have a lot of companies move their corporate headquarters over here.
Yeah, it's my crystal ball is fuzzy on this one, but it seems that we're making two big pro dollar value pressures. One is exports would become very attractive for other people to purchase of ours,
Right.
and that means the demand
Much more
for
so. More
right.
so.
So
Yeah.
people would want to purchase a lot of American goods at that point. The other thing is, like you were just saying, people would be much more interested in investing in the US. So people are going to want to purchase dollars in order to purchase goods and purchase dollars in order to purchase stocks and bonds and
Right.
whatnot because of the tax treatment. So I would say that we'd probably have a big increase in the value of the dollar, probably a big one-time increase in the value of the dollar until we equalize based on the factors which are now permanent. At which point, it's just based up to what happens in our economies and the comparative advantages, how things and trade flows and capital surpluses or deficits work out from there. But I think if we enacted this, we'd probably see pretty heavy appreciation in the dollar, though that has to do with, do we have to increase the quantity of dollars to clear transactions or not, or this or that? It gets pretty wild pretty fast, so it's difficult to know. But that would be my guess.
Well, and basically we've got the ability to do that, but the economics underlying it are all clear.
Mm-hmm.
We're
Mm-hmm.
going to have an attraction of money. We're going to be like a huge magnet for
Yeah.
investment. And what you're talking about with that huge investment or demand to invest is that your house business, you may be borrowing money at one rate, but you may be able to get a private capital loan at 20% less
Mm-hmm.
because they're so eager to put money in. Because again, if they're not paying 30% tax, they can reduce their return 20% and still be ahead.
Right. That's a big, big deal.
And so you've got a situation where it's going to create a lot of upset in other countries. They're going to
Mm-hmm.
have to start looking at modeling their particular country, in a similar way in terms of taxation if they're going to attract foreign investment.
Which is wonderful. Rare do you have a change which can cause these like domino effects. If
Absolutely.
the world decided, hey, man, we got to do a consumption tax only kind of thing, then the world economy would grow and the synergies between our nations would be quite positive and the world would be a
Absolutely.
better place.
And you wouldn't have all of this fighting over tariffs and all
Mm-hmm.
these things.
Mm-hmm.
You have an
Totally.
opportunity. Now, not to say there won't be bumps in the road. Obviously, there are going to be a lot of bumps in the road.
Yep.
But you'll have gone to a system that's there. And the other part where we had a big argument, the politicians more than us, when we designed this bill, was were we going to make it where it had to be, as you discussed, shown on the bill
Mm-hmm.
or included in the price like they do in most parts of Europe.
Mm-hmm.
So then those potato chips don't say $3 plus $1 fair tax, but they just say $4.
Ah.
And so people become inured to the fact that they're $4.
Mm-hmm.
Okay. Now, if I'm right, and almost all the economists that I've ever talked to are right, that $4 package of potato chips is probably going to be $3.20, $3.25,
Mm-hmm.
because it's going to come down in price because of all of the increases that are built into it. 15%, 20%, something come down. So you're talking about a different dynamic, and the politicians, quite honestly, are going to want to have it included because
Mm-hmm.
they
Oh,
don't want
definitely.
the American people to every day, because look, all of us are consumers. You may have people that are children. If my grandson, he wants to go buy a book and I give him $5 and he comes back and says, Papa, it's going to cost me $6 because of this tax they're going to put on. Why? Well, that's because that's how much money proportionately it costs to run the government. Why
Mm-hmm.
so much? Well, that's a good question.
Isn't it?
You should write a letter to the member of Congress from your class, asking why it costs so much and
Mm-hmm.
why we can't lower the spending so our cost will be less, because everybody will see it. Congress doesn't want that,
Oh no. Oh, definitely not.
but it's possible that Trump does if
Mm-hmm.
he's elected.
Mm-hmm.
And so he'll be driving the train. He's already said good things back in 2015 about the fair tax. He's got a lot of knowledge on it. Before, the comments I got back were, I'm going to be attacked because I'm very wealthy.
Mm-hmm.
These are people that talk to him about it. And I'm not, this my second term, I can do it because I
Okay.
don't care.
Okay.
I'm
Cool.
going to do the right thing. Well, this is his second term.
Right.
If he gets elected, he can't be elected again.
Mm-hmm.
So therefore, I think he'll be more willing to bite the bullet. He wants to get rid of tips, tax on
Mm-hmm.
tip. Well, in a way, that's a great soundbite. A lot of people think it's great. He wants to get rid of tax on Social Security. Another great soundbite.
Mm-hmm.
He wants to get rid of tax on overtime. Another great soundbite. But all of those things means you have a lower tax base, which means that the rates of tax on everybody else is going to
Rise.
be higher.
Exactly. It's not a fair tax at that point.
Yeah. If you did it in a fair tax, you get rid of tax on tips.
Mm-hmm.
You get rid of the tax on overtime.
Mm-hmm.
You don't have to raise tariffs to balance out and get more money in. Okay. And you basically have created a situation where, with the stroke of a pen, literally hundreds of millions of tax returns go away.
Mm-hmm.
After about 3 to 5 years of working through the ones that are filed, you don't have an IRS because you don't need it, because the fair tax is collected by the states, and the states get paid for collecting the fair tax. They remit it to the federal government. The retailer, he has a button that he pushes, and it calculates the state tax, the federal tax. The state collects it, and they send it to the feds.
Mm-hmm. That is, I mean, that's something we could do almost immediately. Most all states. I'm originally from New Hampshire, so we don't have a sales tax on most
Right.
things. But this is a structure which is pretty easy to do. We could talk for 4 hours,
Mhm.
but I definitely want to get in why you chose this type of consumption tax, because as you mentioned the VAT tax, it sounds like
Right.
you're referring to it as the credit invoice system one, where you pass along a credit based on costs which you've had from your suppliers. And a lot of these countries started with a type of retail level sales tax, and then they moved to a VAT tax, in large part because there's a really nice paper trail. And we have, when two people are doing business, one of them would prefer to lie in one direction and one would prefer to lie in the other direction. One would like to say, so that means that we have this pretty strong ability to keep down fraud and whatnot. It's already a lot of information that's collected by any business. Um, VAT taxes are all over the place. Like what, 160 countries. A lot of countries have scaled it up. France collects like half of all their income through a VAT. New
Right.
Zealand, I think it's more than that. Theirs is very, very broad based. Um, a lot of people complain that, hey, if we put a 23% inclusive or 26 or whatever you said, though we won't get into, I know a lot of people have criticized that rate,
No,
saying that that's not
it's
high enough and
it's an
whatnot.
inclusive rate of 23% because that's the way the income tax is calculated.
Right. I think that's
The
a fair way to
exclusive
do
rate
it.
at the sales register is 30%.
Mm-hmm. Right. Right. And
Okay.
though some people have said it's going to have to be even higher than that, and there's a
It
lot of
depends on what
literature to dig into it
the
that
only
way.
way you get to a higher rate at this
Mm-hmm.
point is excluding more or raising the prebate,
Uh-huh.
because the rates, the one beautiful thing about this is you've got very accurate numbers on spending.
Right. Okay. So
Okay.
just to run through real quick before we get to VAT taxes. Just tell me included or not included. Ready? Um, government spending.
Included.
Okay. So it doesn't actually raise revenue because they're taxing themselves, but it is included. I do agree it needs to be included because otherwise it would appear as if government goods and services are cheaper than the private
That's
sector
right. We're
alternative.
subsidizing competition to the
Good. Okay.
private side.
I'm a fan. All right. Um, education can be an investment in human capital. Obviously,
Excluded.
okay, excluded. All of it or up to a certain
Nope.
point only
At this
for,
point, all of it.
okay, gotcha.
All right. That is something that's going to be debated.
Right.
But
What
again,
about, what
when
about
you get
rent?
rent is included,
Rent is included. What about owner equivalent rents?
not included.
Okay. Okay.
However, if you buy a
I
new
mean,
home, your new home is going to be subject to the FairTax.
right.
It's a retail purchase.
What about a sale of a used home and they'll give
Not
it to,
included.
not included. What if there were
Only new
improvements?
products.
What about improvements to the sale of a used home?
The improvements are going to be included on some percentage factor.
Okay. Gotcha. Because that's a new addition to a durable
Right.
product sometime.
Right.
Okay. What a, this is a different podcast, but well, crystal ball heavy episode. If we do include a tax on rents, but we don't include a tax on owner equivalent rents, and for those people who aren't terribly familiar, basically you can imagine that you have a landlord, he might take out a loan, purchase a house, and then rent it to you. So we have somebody who purchased, took a loan, and then somebody who is getting the benefit from and paying the cost of living in this home. When you own your own home, you are basically the tenant and the landlord at the same time because you pay for it, you bought the product, you did this, and you're receiving the value of that. It's just no money changes hands. So currently in like GDP calculations, we commonly include, I think always include owner equivalent rents in GDP as if that was a type of personal consumption. So if we tax one and not the other, what do you, this is speculation. I'd have to think for a second. I need more in my coffee cup for this one. What do you think would happen to the stock of rental housing versus the stock of owner housing? Because this could, just off the cuff, this could really shake up the housing market. And I don't entirely know off the top of my head how. What do you think?
It can, but remember, the big fraud that's been perpetrated on all of us is that we think of our income as our take-home pay.
Mm-hmm. Right.
In other words, if you've got somebody, and I'm going to use my example again, who is paying $1,000 a month in rent, they're having to earn how much to pay that? $1,200, $1,250, whatever, to net the $1,000.
Right.
Okay. The homeowner or the renter, the lessor, let's call him that, is going to have an opportunity. And again, it's all competition. Right now, it's been, at least down in Florida where I am, it's been a landlord market. There's not enough housing units. But the situation is that with the FairTax, you're going to pay, and let's say 30, it won't be quite 30 in this particular case, but 30%. So you're going to pay $1,300 out of your gross income.
Right.
Let's say you made $5,000 a month. Okay. You had to take $1,250 out today and $1,300 out based on your FairTax. That makes sense?
Yep.
Okay. The one thing we're not forgetting, though, we're not remembering, is that person making $5,000 a month is making $60,000, and let's assume it's a family of 4. They get a prebate which covers the first $40,000 of spending, right?
Gotcha. Okay. Yep.
All right. So that balance of $20,000 at 30% is $6,000. Okay. That turns out to be 10% rate of 60.
Right.
All right. So if you go back to my example of rent, the actual amount net that the guy is paying extra is $100, not 300, because he's paying 10% effective rate on that $1,000. I may have gone through that too fast the other way, but you've got to look at the prebate determining the amount of money you pay in the FairTax.
Right.
Because
So,
until you get up to hundreds of thousands of dollars, you're not going to pay 30% ever.
so what
Because
about
you've got that base of the prebate.
that makes sense. So the person who chooses to buy instead gets the benefit of the prebate, gets the benefit of um, uh, gets the benefit of keeping his whole paycheck, and then encounters only a bill for his mortgage. Um, Certainly, that guy seems a lot better off than
Well,
renting.
he actually is. And the reason that it was set up that way
Mm-hmm.
is because we tried to model it as much as possible on some of the precepts that were embedded in the income
In the
tax.
income tax. Okay, gotcha.
Home ownership has been favored.
Right, because you get the mortgage interest deduction
Well, but almost
for one
nobody
reason.
does. But it's
Mm-hmm.
offered. You've
Mm-hmm.
got to be a very high income earner to make it make any sense at all.
Yep.
But we can go through that, but you understand all those arguments. I mean, it's just a facade for most people.
Mm-hmm.
Only 10% of the people itemize.
Oh yeah, and I mean, after
Only
they raised the exclusion, I think
right.
Trump raised it. That
Yep,
knocked a bunch of people out.
that's right. That's right. And 10% itemized. So those are the only people that can even take the homeowner mortgage deduction. So
Right.
90% can't. And the crazy part is that the realtors are out there. I've debated them before.
Good.
And they're saying that we've got this, I forget who it was, one of the big, Price Waterhouse, I think, one of the big accounting firms did a study that if you got rid of the mortgage deduction, prices would fall of homes 15%.
Mm-hmm. Wow.
And I said, okay, so 90% of the people don't use the home mortgage deduction. That means that 90% of the people are actually paying 15% more for their homes
Good
than
night.
they would if we got rid of the mortgage deduction.
Oh my gosh.
You think about it, what is any other explanation possible?
That's bad. I mean, I think that's a great example of what's wrong with our current tax
Yeah.
code and how easy that. I think you could stop 1,000 people on the street, and I don't think any of them would have put that together. But that's true, right? It's we're causing people to bear costs which aren't their own, and it's not just economically inefficient. That's wrong, right? This is a justice issue. Where on earth were we? I like that. So we got to hit one or two more things.
Sure.
Financial sector, big part of GDP, tricky to tax.
Mm-hmm.
How do we deal with financial products? I mean, some of them are really, really tricky. Like you have a bunch of money in your checking account, you get the benefit of having a bank account, et cetera. And that's not paid for in a fee. Typically, it's paid because you get less interest on the deposit than you would
Right.
have gotten otherwise. Doesn't seem like it could easily be taxable. Other things like mortgages and loans, you're getting a benefit here. There is a sale. It's just kind of tricky for most people to imagine, say, getting a car loan, the loan as buying and selling something from your bank. Are we applying?
We are applying it.
How do we
It's
do
a
it?
very complicated, as you said, calculation.
Mm-hmm.
And it has been pointed out to me by people who are very familiar with the financial thing that we need to probably, when it gets into committee to actually be passed,
Mm-hmm.
we're going to need to really address it more clearly.
Yep.
But it is contemplated that there will be that percentage of markup effectively
Right.
is what the retail. I mean, I'm just making it very simple, but that's the concept. So
Okay.
if your mortgage loan percentage should have been, I mean, they're getting it at 4% and charging 6% at the 2% markup.
Mm-hmm. Okay.
That becomes the subject to the sales tax, and it's actually a different calculation even than that.
Mm-hmm.
But it's a very, very complicated calculation.
I'd
And so
imagine. Yeah.
And so what we've done is we've said, okay, we're going to kind of punt on that. We know we want to include it. We know using it this way, we're going to get X amount of dollars,
Mm-hmm.
based on the economy and everything. But primarily, your income from the fair tax is coming from goods and services
Right.
that are separate from that.
Right.
And
It's a big part. It's not a huge part of the economy, but it is something. I'm really glad that you're including that, because otherwise, if I just own a factory that makes widgets versus if I take a loan and then buy a factory that makes widgets, if we didn't, the purchase of, say, a new factory or the purchase of different means of production could represent equity covering the cost of something.
well,
I guess I'm,
except one thing, in your example, it's business. Remember, this is retail
oh, that's
only.
deducted, right? I'm thinking VAT over here.
Yeah,
Yeah. So okay. So I guess when we're purchasing something that was equity financed at a retail level versus if we're purchasing a product from a business which debt financed it, if we don't
right.
charge, stuff, or if you're buying it with debt versus buying it with equity, I guess, then we don't want to skew it towards debt by not applying the tax to financial services and
Well,
debt.
yeah, we don't want to skew it, but on the other hand, under the present code,
Mm-hmm.
all of that becomes deductible if you're buying it for business.
Right. I mean, debt's a great thing to use in
Yeah,
business
yeah,
right now. Yeah.
yep. And so it's really, again, and I'm not saying it's perfect because you had a bunch of lawyers do a lot of it. Okay.
Okay.
But I am saying that we did try to take it, but we used as our base point
Mm-hmm.
what is the philosophy behind the present system, not the way it screws things up,
Right. Right.
but what
Just
does it do? Well, it favored home
right.
ownership.
Uh-huh. So you'll
So
keep.
we, debated and decided not to include any benefit from owner rent.
Gotcha.
Okay.
Gotcha.
It favors deduction. Now, the part of it that was pretty screwy that this changes is that you may know people that were relying on an R&D deduction that the Congress changed and said,
Mm-hmm.
even though you've signed a contract, even though you're paying it, you can't deduct it. Currently, you got to conduct it over 5 to 10 years.
Right. Uh-huh.
And they suddenly had a tax problem.
Right.
So all of that goes away because you have 100% expensing.
Perfect.
You
Yep.
know,
Yep. So
it's
you don't
not,
have to depreciate things over
there's no
long periods of
depreciation, there's
time.
no nothing, because again, the only time that you're going to have any consequence of tax will be at the retail level.
It's
So
going to make
there'll
it
be
so easy.
companies that never pay a dime.
Mm-hmm.
A chain of companies in the chain of production until it gets to Walmart,
Right.
and it'll be collect. And then in terms of the reason why most of the countries went away from goods and services taxes, they called them in Europe, and they still call them that, is because there was no way of controlling evasion,
Mm-hmm.
because you had too many little store owners
Oh, yeah.
who had a crank register that would collect the money, and they either would or would not put it in the till or put it in their pocket.
Yep. They'll say, oh, the
Now,
cash price is this. So
yeah,
that way
now
it's not
you've got a
tracked.
situation like California did a study 3-4 years ago where they did $50 billion of sales tax, and they
Mm-hmm.
had a 2% evasion rate. Why?
Wow.
Because 90% plus of the purchases are made from big retailers. Think of you or I going to Walmart and saying, "Oh, by the way, I don't want to pay sales tax today."
Right. Yeah. At big box retail. So this is my biggest issue with the fair tax is, and it's an empirical question, right? Like what you just mentioned. That is the evasion, the black market activity that comes from putting all of the tax just at the retail level. I like the idea that in a VAT tax we have this paper trail. It's spread through a variety of levels, but as you mentioned, and once we get to a high enough rate, you're really incentivizing black market activity. So just why would you choose
You're,
this structure
you're
instead of a
totally
fixed?
doing it, but let me ask you this question though, Jake. Where are you going to get the black market product?
Probably smaller
Yes,
businesses.
yes, you can. You can have gangs that steal stuff and sell it off
Hmm.
a truck. All right.
Yeah.
You can have, but how much of that's really going to take place?
I don't know.
But not very much, because
Okay.
for me to go to the store and buy something is a huge convenience. I get the, I go and I
Hmm.
buy it. For me to go find you, who's pick up somewhere,
Right.
who's going to sell me something, and it's not going to be without the tax. You're going to mark it up. It's just going to be cheaper than if I paid the tax.
Hmm.
I'm going to have to go find you. But here's the important difference that we thought was so critical. Under the present system, if I pay you cash, Jake, it's totally fine because it's your requirement to report it.
Hmm.
Okay. If you are selling retail goods and you don't charge me the sales tax, you're guilty and I'm guilty for participating in that
Right. Okay.
because I know that the sales tax, I can't say, well, no, it was Jake's problem. No, everybody it's very clear. And one of the problems with the income tax is it's not clear.
Hmm.
It's very unclear. That's why they had like 2,500 prosecutions for tax. Can you believe it? In
Wow.
this country, 2 years ago, 2,500 prosecutions for tax fraud
Oh my
that
goodness.
actually got to trial.
Uh-huh.
Hundreds of millions of returns. 2,500 people cheated. Ha ha ha.
Hmm.
Okay. You know, you've got a situation where the commissioner of the Internal Revenue, Reddick, he admitted it was 3 years ago in March, over $1 trillion of evasion.
Wow.
This isn't just people taking cash. This is people that are over, stating expenses. Yeah, taking cash, doing different things, uh, buying products for cash and then selling them for cash. All those things are going on. A lot of it in conjunction with their business. I mean, I've done town halls with members of Congress who were there, and they'd have me come and speak about tax reform.
Hmm.
And I'd always ask people, how many times in the last 6 months have you had an opportunity to get a service for less money if you paid cash? And I remember I was doing one in Kansas with Senator Jerry Brown, 3 members of Congress,
Hmm.
3 members of the House that were there, and almost every hand went up.
Wow.
And I said,
Certainly in
well,
construction that happens a lot.
a lot.
A
And I
lot.
said, so what
Yeah.
happened? Was it because they were going to have less accounting costs? Everybody started laughing. They're not going to pay tax,
Hmm.
right? The plumber who says, well, Jake, that disposal is $325 if you pay me with a credit card or a check, but it's $250 if you pay me cash.
Hmm. Oh, that happens
All the time. The
all the
states have
time.
become so good at monitoring their sales tax that 10% of the merchants who do not pay 90% of the tax, I asked Ernie Grenfell, he was a director, and this was in the 90s, of the California Board of Equalization, which collected the sales tax. So how do you stop the bodega
Hmm.
from cheating? And he says, well, we've developed models. We take the demographics and we look at it, and we have determined how much you should have in shrinkage, from spoilage, from shrinkage,
Gotcha.
based on what you buy. And if they're out of that range, we send somebody in to audit them.
Okay.
And he said, and it's, you don't want to be a sales tax audit because it's worse than having oral surgery with no anesthetic. And so, you have that, and it gets around because in the community, everybody says, oh, no, I can't do that. So,
Right.
yes, they still cheat,
Hmm.
likely. Ernie said, Ernie Drummer said it, but it's very much smaller. And in order to get 10%, 15%, or almost 18%, like we have now, evasion, you'd have to have the other 10% of merchants, not the big box merchants and those, cheat almost
Like all the
100, well,
time.
100% to
Okay.
get 10%.
So I got another way to cheat, and that is so businesses can expense everything, right? So
Hmm.
I say, all right, I'm going to go buy a pickup truck. And I go up there and they say, hey, it's $50,000, but it's going to be 65 because of the VAT tax. And I go, oh,
Hmm.
hey, Busher Enterprises LLC is now going to buy it. And I say, here you go. This is now for my business and I can expense it. And at that point, I don't have to pay that
You don't
tax,
have
right?
to pay the tax.
So then my friend says, dude, that's a really nice pickup truck. I'd get one, but I only have $55,000 to my name. And I say, it's your lucky day, my friend. I will sell it to you for $55,000. And then
Yeah,
I sell a used pickup truck, which isn't subject to
that's right.
sales tax, to my friend for 55,000 that I bought last Tuesday. And now I pocket 5,000. He gets a $10,000 discount. And right? What happens
Yeah,
next?
but what happens under the present system? You can do the same thing. How many people do you know?
Well, I'm buying it with post tax dollars. So I paid
No,
my
no,
income tax.
in your business, you can go
Uh-huh.
and say, and this, I mean, when I used to handle audits for people, I can guarantee you there were almost always going to be similar things.
Mm-hmm.
And every child's computer was bought through the business.
Mm-hmm.
Every child's, their a lot of their costs were paid through the business.
Gotcha.
All right,
Because
and
you can either expense it or still depreciate it, which comes off your taxes.
that's right. And so, frankly, a car, I mean, there were cars that they were driving to college,
Mm-hmm.
paid through the practice. I
Wow.
mean, just all of these different things were being done, and I would show them how they could do it legally,
Mm-hmm.
get the same thing, but now they were avoiding they were evading taxes.
Okay.
So you're not going to eliminate all corruption.
Mm-hmm.
You're not. There are going to be people who find a way to game the system a little bit.
Mm-hmm.
All right. But the risk is that it's so much clearer today than it was before. Because again, there are two parts to the puzzle, there's the purchaser
Mm-hmm.
and there's the seller. And both are responsible for the payment of the sales tax.
Gotcha.
Now,
Okay.
if
So
I pay you the sales tax and you don't pay it on, I'm free and clear.
mm-hmm.
But if I don't pay you the sales tax, I've broken the law because I
Gotcha.
bought something that I should have paid sales tax on that I didn't. There's no gray area. It's very clear. And from a
So
tax lawyer point of view, that is the most critical part of enforcing the tax code are gray areas.
mm-hmm.
You want it black and white. And so will people game the system? Absolutely. Will people I mean, I talked at a group of uh, dental surgeons, different types of surgery, but surgeons, high income guys. And they love the idea. And the one guy says, oh, yeah, he says, I'm going to have a deal where, to some of my friends, I'm just going to let them come in and do the work without the tax.
Mm-hmm.
I said, okay, you can do that, but you're now putting your life and your practice in the hands of these people.
Right.
Because if they report you, you're going to lose your license.
Yeah. No, that's yeah.
And
So
so basically, it's black and white. I said, now, if you want to give them a discount, lower the price you charge them
and then
enough.
pay the
When you
tax
add
on
in the
that.
sales tax, it's still a discount.
Gotcha.
It's you can do this literally. You can fold it, you can iron it, you can do whatever you want.
mm-hmm.
But you, the idea was we wanted a template that was never intended to be perfect.
Mm-hmm.
We knew that. But we wanted one that would allow us to work. Like when Jared Bernstein, who's now the chairman of the financial, whatever the president's financial advisor, forget the name, title. I talked to him 5 years, 6 years ago about the FairTax, and he knew about it. He says, "Oh no, I don't like it because it's not good for my quote demographic that I'm trying to help."
Hmm.
I said, why is that? And he said, well, I just don't think it's fair because of this. And I said, well, what if you increase? At that point, the median income was 55,000, as I recall.
Okay.
And I said, what if you increase the prebate to 60,000? Now, what that's going to do is that's going to cause us to increase the rate to
Mm-hmm.
maybe 34 or 5% to pay for the additional prebate.
Right.
Okay. So you're going to end up exempting that whole group of people that's in your demographic completely from FairTax. And you're going to make people making more than that pay more in tax.
Mm-hmm.
What could be better? And he
What do you
smiled at
say?
me and he says, I like that idea, you know,
Okay. So,
because you can do that with this plan, but look at the benefit you still have.
mm-hmm.
You don't punish people who work,
Mm-hmm. Or
you
invest.
reward them. You know, like Mike Huckabee is a friend of mine who ran it for president on the FairTax.
Oh yeah, he did, didn't he?
Yeah.
I remember
Mike
that.
says, he says, one of his things he said, it's funny because when you train a dog, you reward them for good behavior and you punish them for bad behavior.
Mm-hmm.
The income tax rewards them for bad behavior because they can write off any losses.
Yep. Yep.
And the more that they work, the more that we punish them.
Then the tax on overtime is
Yeah.
steep. So you work
Yep.
extra hard, and that
Yep.
pushes people into working,
Higher
multiple.
brackets,
It's
higher amounts of tax.
it's
Because
nuts.
remember, they got to pay not only income tax, but 7.65% more FICA.
Yeah.
So, you're talking about, and I have a lot of people that told me, yeah, I used to work overtime, but I quit because I calculated it out
Mm-hmm.
and I was getting paid so little per hour
Yeah.
net
Yeah.
that didn't make sense.
Our current system, I mean, there's flaws in no matter what. There isn't anything perfect, but the amount of flaws in our current system is mind blowing. I mean, I know we talked about an hour. How are you doing on time over there?
I'm fine. We can go further, but let me ask you
Okay.
something. I've been wanting to ask you this since the beginning, but I wanted to wait for a
Oh,
while.
sure.
Isn't this an example of cutting the Gordian knot?
Yes. Big time. In fact, this is actually a long time ago, like years and years ago. I looked at a whole bunch of different solutions. One is figuring out a consumption tax, and there was 11 other big changes. And I actually built it into a big packet. And I sent it to some the state reps, and I started to meet with some of them. And the idea was the big knot was the government, and there's different ways to cut through a lot of this chaos. Because the Gordian knot was about who should rule, so it's a big problem, and we ought to solve this, cut through the chaos, and have good rulership. So I thought, well, I might put this into a book at some point, a whole bunch of just sensible solutions. One of them is obviously a consumption tax, and name it Cutting the Gordian Knot. And then I scrapped that plan, wrote a number of other articles, posted to a website, and before you know it, the name just carried on. So this
Right.
is one of the original knots, which I always intended to cut. And I think it is a clear, simple, out of the box kind of creative solution that solves a massive amount of problems all at once and gives us a better type of rule right now. The power to tax is the power to destroy. And right now we're destroying people's incentive to save, to invest, to pass down wealth to their children, to work overtime, to work hard, to invest in human capital. It's terrible, right? This is a big, big, big win if we could get a consumption tax. And I think you're right that all economists know that. It's just the question of which one and how we would package it. And there's a lot of details that would have to be ironed out. I guess, I do want to go back to, I like VAT taxes. I mean, I don't really like any taxes, right? But as taxes go, I like the VAT. I see it as very similar in its overall effect to something like the fair tax if we design it in a similar way and we have the same things included. One, it's passed up through the supply chain, and one it's at the retail level. Obviously, you prefer having it at the retail level, and you've described how empirically, in the case of California, evasion was fairly small. What are your top reasons to say no to a VAT tax instead of the fair? Or would you be happy if somebody said, I like all the fair tax stuff, let's just form it as a VAT?
First of all, if you gave me the choice of the income tax or a VAT, the VAT wins.
Sure. Yep.
Okay.
Hmm.
But I have worked with the VAT for a long time. I have worked with companies that have, in a lot of countries, Italy,
Hmm.
there's a high unemployment rate in southern Italy, but you can't find anybody to work because they're all working in the underground economy.
Okay.
They hide it through the VAT. In Mexico, I've had clients who came from Mexico. They actually use, because you get a credit for VAT paid.
Right.
Okay. They have companies that falsify the amount of VAT paid on an invoice.
Hmm. Hmm.
And so you have a lot of fraud. In Germany, I believe, maybe it was France, the VAT rates vary based upon where you got the coal. This was years ago.
Hmm.
So you can make it vary for various things. In other words, you can tickle it,
Yeah, it's a
tease it,
problem.
make
Uh-huh.
it do it because it's hidden.
Right. Okay.
Nobody's going to know about it except the coal company or the
And their
perfume
supplier.
company or whatever it is. And if you don't have this many employees, it's a certain rate. It's just
Yeah.
crazy. What's
Variable
going?
rates cause problems.
Yeah. Whereas the sales tax is very simple.
Hmm.
Now, one of the things, and I think it's part of your underlying thoughts here, but if you took, and there are several states, well, as you know, you've got all these states now who do not have a state income tax,
Hmm.
and they're booming.
Hmm.
Tennessee most recently, but two of the biggest economies in the world are Texas and Florida.
Yeah.
They don't have an income tax, and so
Florida, same economy as Russia, I believe.
yeah, basically.
Hmm.
And when I talked to Mark Roberts, who's running for governor in North Carolina, Mark wants to get rid of the income tax, state income tax.
Hmm.
And I said, Mark, your biggest problem though is that you've got a demographic that look at it, and I'm talking about the lower income demographic, that say getting rid of the income tax is going to force us to pay more taxes because we're going to have to pay more sales tax
Right.
to replace that income. And it may be that the economy is going to grow in the state. It may be we'll get new businesses, but it's 3, 4, 5, 10 years away
Hmm.
before the effects really come in. I got to eat tomorrow. So you're taking money out of my pocket. I said, if you did a state version of the FairTax, I'm going to use Alabama as an example, you would have a rate that was about a half point higher than their present sales tax rate.
Hmm.
But a family of 4 making 40 grand would be exempted 40 grand of that, and it would get like $200 a month.
Because of the prebate.
Okay.
Yeah.
Yeah. So you've now got something that goes to those people, and it's only on new goods, not
Hmm.
on new and used. And it's only on retail services. And if they buy used services, used goods or whatever, they're not going to pay. Hard to buy used services. But anyway, used goods. And he really liked the idea. And if he wins, which is not necessarily going to happen, but if he
Uh-huh.
does win, then I promised him I'm going to bring a team to meet with him in the Capitol
Oh, cool. Hmm.
next January. We're going to talk about structuring the bill to do that because he wants to not get rid of the income tax in 5 years. He'd love to get rid of it in 1 year.
Perfect. Yeah. Okay. So, one thing you
You can't do
mentioned.
that with a VAT.
So, yeah. So, and with the VAT, what you talked about was people kind of working in an illegal economy. That's my main issue with the VAT is because it can actually bifurcate the economy, right? So, as
Right.
soon as you say, well, I don't really want to charge the VAT, Then if your supplier is just like, hey man, here you go. Yeah, I'm going to do this. You're going to go, no, this is going to cause a headache because I'm not going to report my income, but he's going to report that he sold it to me. So now you have to find a supplier that's not VAT compliant, either because they're too small
Well,
or they're working in the gray market or black market. And now you're
well,
creating two economies, a VAT and a non-VAT.
you're doing that, but also, at least in Mexico, the way they were getting around it,
Mm-hmm.
they had a guy that was selling it and reporting it correctly,
Mm-hmm.
but they had it another sale that they purchase that they made, total false purchase,
Mm-hmm.
where they were credited with a huge amount of VAT paid, which they
Okay.
used to offset what they owed
Mm-hmm.
in VAT. They actually got a refund.
So, but I mean, they had to have targeted like a real business, or no, it was a made up business.
Made up.
Okay, so they made up a business. So there's no database to say, all right, Mexico Coal says that this is their total sales.
You would think
Mexico
so,
Coal
but
total
they've
amount
been
of
doing this for many,
purchases.
many years. And in
Huh.
Mexico, like I had a client that sold his business. He moved up here and he bought another business, but he was telling me how it worked. He had a very, very successful retail chain of stores.
Mm-hmm.
The manager got paid, I think these are right numbers, some years ago, $6,000 a month.
Mm-hmm.
But he only reported receiving in salary $2,500.
Hmm.
He got paid $3,500 a month in cash.
Gotcha.
And all the management employees, not necessarily the people working at the lower level, they all got paid the same way.
Gotcha.
And when he was going to buy land for a store, and let's say it was a $2 million parcel, he would pay on the books $1 million and $1 million
Mm-hmm.
in cash. And I said, well, where do you get that money? And he says, I get it. And he explained how they have these companies set up in Mexico. And literally, one he told me about was owned by some ladies who do cleaning, janitorial services.
Mm-hmm.
And they basically are the owners of this company. And they provided him an invoice showing that he'd paid some large amount of VAT,
Mm-hmm.
which he used to get a refund, which created the cash
Oh
to
my
buy the
gosh.
property. All right. So, and he just decided, he couldn't. I said, well, you're telling me you think that's unethical and illegal and all that. And why? And morally, he just felt bad about it. And I said, I commend that. But did you have to do it? And he said, if I didn't do it, they wouldn't sell me the land.
Oh wow.
I
Okay.
couldn't get the people I need for management because they
Gotcha.
go somewhere else. So the only
Wow.
way I could operate in Mexico was to be a criminal.
So it's worse than just bifurcating into a compliant, non-compliant. It's actually bifurcating into a compliant and a we all have to lie together kind
That's
of
right.
thing. Okay.
Yeah.
So you
And
think
it
that
doesn't mean it would always be true here, but I'm
uh-huh.
just telling you, around the world, evasion is a huge problem
Mm-hmm.
because of the fact that they can game the system.
Right.
Retail sales tax, the big knock on it historically, and I think it was justified,
Mm-hmm.
is how do you monitor it?
Yes. Yeah,
Because
yeah, yeah.
we had
Yep.
90% of the sales being made by 80% of the merchants,
Mm-hmm.
it's almost impossible.
And now the majority of sales are made with credit cards and debit cards.
A lot of it, but even in cash, they're still going to
Uh,
these large
Walmart,
merchants.
Best Buy, yeah.
Yeah, like you go buy that truck you talked about. What do? You have to go to the state to register it.
Mm-hmm.
They're going to collect not only the state tax, but the federal tax,
Mm-hmm. And
unless you've got a retail permit.
I use the example of, somebody who has a small business or something. I've seen estimates for income tax evasion as high as 55% for sole props and other similarly sized businesses like little tiny LLCs.
Yeah.
So it's true that with like an income tax, if you work at Walmart, Walmart's not going to kick you a favor and not send some of your money in for taxes. Now, you can then lie later on and try to get a larger refund, but at very least it's initially collected by employers. But if you are the employer, then there's just a lot of I'm really too small to audit. They're not going to waste their time with this tiny fish like me. So I could totally cook my books.
You
I pay my taxes fairly but unhappily. But
could.
I could there's a variety of ways that I could fudge numbers and save a massive amount in taxes, and most people do.
And that's true with the income tax. And quite honestly, the reason there are that few tax prosecutions is it is so hard to prove fraud
Yeah.
because fraud is intent. You
Hmm.
could say, I really thought that buying all those uniforms for the baseball team should be a legitimate deduction.
It's marketing.
Yeah, and maybe it is,
Yeah.
but
Uh-huh.
but they don't have your name on the suit.
Hmm.
They- all right, so it is something that is so unclear that you eliminate all of that. And what you said in the beginning of the show was you allow people to not concentrate on anything except making better products that they can manufacture and put in the hands of consumers.
Absolutely. I think that's probably a good place to end. Is there anything else you'd like to let people know? Obviously, tell them about where they can find out more about FairTax.
Absolutely. Well, if you go to fairtax.org, FAIR, fairtax.org, you get access all of our economic studies. You'll get access to the information that we do. I do a letter each week. Others do letters, uh, which kind of comment on how the fair tax would apply. For example, did one on how it would eliminate the need to raise tariffs by just simply making that change and
Hmm.
taxing appropriately, like the VAT does. So, fairtax.org, a lot of people find it surprising, but I've been doing this 34 years, Jake, and I've never been paid a dime.
Hmm.
Almost all of us, in fact, all of us are volunteers, and none of us are getting reimbursed and all. We're doing it because we think it's important and we believe it's something that's going to have a big impact for our children, grandchildren, and for this country. Because we think that this is a beautiful, wonderful country, and we need something that's more appropriate than the present tax system to allow it to continue to be a beautiful, wonderful country.
Perfect. Wonderful. All right. Well, thanks so much for joining me. It's been a great talk. I really appreciate it.
I really appreciate it. I've enjoyed it very much. Thank you for having me.